You work all month. Early alarms, long shifts. Maybe you're on your feet all day. Payday hits. You expect $2,000. You get $1,456. Where did the rest go? Welcome to the invisible system running your life. Before we break it all down, make sure you like this video, share it with someone who needs financial clarity, and subscribe to Mano Invest so you never stay confused about money again. Today, we're decoding the financial matrix: taxes, banks, interest, inflation, recessions, credit scores, investing, value, and the most powerful asset of all, time. Let's begin. Taxes, the entry fee to society. Every dollar you earn gets sliced before it reaches you. Federal tax, state tax, Social Security, Medicare. It feels like money evaporating, but taxes are essentially the membership fee to live in an organized country. Roads get built, schools operate, food gets inspected, systems run. There are different types. Income tax hits what you earn. Sales tax hits what you spend. Capital gains tax hits what your investments earn. Social Security is forced retirement savings. Medicare funds health care for older and vulnerable citizens. Then comes tax season. The government already has most of your numbers, but you still have to calculate everything and hope you're right. Miss it? Penalties. Nail it? Silence. Fun system. But here's the twist. Countries with higher taxes often have higher overall quality of life, so while it stings, it's not pointless. Banks, not vaults, but middlemen. Most people imagine banks as giant steel boxes holding stacks of cash. Reality is different. When you deposit $1,000, the bank doesn't keep it sitting still. They lend most of it out. That system is called fractional reserve banking. They keep a fraction, they lend the rest. Why? Because not everyone withdraws money at the same time. Banks make money by paying you low interest and charging borrowers higher interest. You supply the money, borrowers demand it. The bank sits in the middle collecting the spread. Your money isn't sleeping, it's working. And in the U.S., deposits are insured up to $250,000 per person, so even if the bank fails, your money is protected up to that limit. Interest, the double-edged sword. Interest is money renting money. Borrow $1,000, pay back $1,280. That extra $280 is the rental fee. There are two types: simple interest, flat, predictable; compound interest, interest earning interest. Compound interest is quiet at first, then it accelerates. Debt compounds against you, investments compound for you. Miss credit card payments at 20% interest, small purchases become expensive mistakes. Invest at 7% annually, your money multiplies over decades. If you're paying interest, eliminate it fast. If you're earning interest, give it time. Same force, different outcome. Inflation, the silent erosion. You buy something today, next year same item costs more. Your money didn't shrink, its purchasing power did. Inflation happens when demand exceeds supply. Production costs rise. Too much money enters the system. People expect prices to rise and spend faster. A small amount, around 2% per year, is normal. But when inflation spikes, savings lose strength, wages lag. To cool things down, central banks raise interest rates. Higher rates mean borrowing costs more. When borrowing slows, spending slows. When spending slows, prices cool. It's economic temperature control. Recessions, the economic reset. A recession happens when economic activity declines for at least 6 months. Jobs get cut, spending drops, businesses shrink. Why does it happen? High interest rates, global crises, market bubbles bursting, natural cycles. The economy moves in waves: expansion, peak, contraction, recovery. Recessions are painful, but they're not permanent. Eventually, rates fall, spending returns, businesses rebuild. The cycle continues. Credit scores, your financial reputation. Your credit score is a 3-digit trust rating from 300 to 850. It doesn't measure wealth, it measures reliability. It's based on payment history, credit utilization, length of credit history, credit mix, and recent applications. Pay on time, keep balances low, avoid unnecessary new accounts. A strong score lowers your borrowing costs. A weak one makes everything expensive. No credit history? That can hurt too. It's not about having debt, it's about managing it properly. Money, a shared belief system. Money only works because we agree it works. A dollar bill has value because society says it does. Governments issue it, central banks regulate supply, people exchange it for goods and services. Too much money printed? Inflation. Too little circulating? Economic slowdown. Currency is built on trust, and trust is powerful. Investing, making money work. Inflation slowly eats idle cash. Investing is how you fight back. Instead of trading time for money, you put money to work for you. You can invest in stocks, ownership in companies, bonds, lending to governments or corporations, funds, diversified baskets of assets, real estate, property generating income. Markets rise and fall, but long-term investing rewards patience and consistency. Wealth is rarely built overnight. It's built quietly over decades. Value, the real driver of wealth. Money follows value. Gold isn't magically valuable, people simply desire it. The same principle applies everywhere. Create something useful, solve a problem, improve lives. The more value you provide, the more people are willing to exchange money for it. Perceived value matters too. Branding alone can multiply price. Understand value, and you understand wealth creation. Time, the ultimate asset. Time is the multiplier behind everything. High earners don't just work harder, they leverage skills, systems, and investments. But nowhere is time more powerful than in compounding investments. Small, consistent investments over decades can become life-changing, not because of luck, because of time. Money isn't complicated because it's impossible. It's complicated because no one explains the full picture. Now you understand the system: taxes, banks, interest, inflation, recessions, credit, investing, value, time. If this helped you see money differently, like the video, share it with someone who needs financial clarity, and subscribe to Mano Invest for more content that makes you smarter with your money. On this channel, we don't just chase money, we understand it. See you in the next one.